David Marcus, one stock you like in the Evermore Global Value Fund is Vivendi. Now, shareholders have been waiting for liftoff on this stock for a while. They've been getting it in the past 3 months. What takes it higher from here? Is this for real?
I think it is for real. Vivendi now is led by Vincent Bollore, who's the chairman. And he and his company own 15% of the stock. So he's slowly been increasing his stake. He's really been orchestrating a lot of the behind-the-scenes changes. Just this week, Vivendi announced that they now own 15% of a company called Telecom Italia, the biggest phone company in Italy. So they're taking the money that they received from selling a lot of assets, and they're redeploying some, and they're giving some back to shareholders. So the stock, it looks like it's not moving much, but over the last 3 years, it's actually doubled. We think it's worth at least 50% more. They've gone from net debt of almost $6 billion a couple of years ago. They have close to $18 billion of net cash now. So they're giving some back to shareholders with dividends. We should get a whole euro next week, another one early next year. And at the same time, they're making strategic acquisitions. And so this is actually our largest holding today, and we're very happy with it because we think that there's a lot more value to come out. And the wheels are in motion now. So it should start to really come out from here.
And staying in Europe, you're also bullish on ING Bank. This is a Dutch bank. They recently spun off their Voya brand for financial advisors. So talk about how this is performing now as a pure play.
Well, so ING was bailed out by the Dutch government during their financial crisis. They've paid back all the money. And part of the bailout was they had to get out of ING US, which is today called Voya. They're completely out of it. ING itself, it's a boring bank with an investment banking arm. Well, it turns out boring banks make a lot of money. And so in this very low interest rate environment, ING has figured out how to actually make money. So if rates move up, which a lot of people do expect to happen, they'll actually make more money. So they are very well positioned. We own ING. We actually also do own Voya. And they spun off another business in Europe. And so as they are still, and they have a few more things that they're selling, but it's well positioned, it's well run. It's not as cheap as it was when we started buying it a couple of years ago, but it's still a compelling situation. And I think even there, it's just coming into its own. This is an old bank, but it's sort of a new bank now that it's shed all these non-core assets.
And you're also positive on Marine Harvest. So please tell me how the Norwegian salmon market is doing.
It's doing well. So Marine Harvest is one of the largest salmon farming companies in the world. It's actually controlled by a man named John Fredrickson, who is he's the richest man in Norway. And what he has done with this company is really rationalized the entire industry. So it was very disparate companies out there. Marine Harvest is, as I say, it's the biggest. They've been cobbling up a lot of the small and medium-sized companies. It's a good business. You're getting away from this commodity valuation approach of what's the price of salmon, and then investors would just sort of figure out what that means in terms of the stock price. Now that you've rationalized the industry, you're trading on different metrics. People are looking at it the old way: earnings multiples, cash flow multiples. The company will probably be paying out more than around a 10% dividend this year. So it's a very high cash generating company. They're giving a lot of it back to shareholders. They're looking to acquire other salmon producers in the world and really just continue to dominate this entire industry. What is also interesting is that Russia was once a big market for them, but with the sanctions that were imposed on Russia, Russia also imposed sanctions, so they don't import any salmon. So even without the salmon to Russia, the company's doing extremely well. So a bonus down the road is if the sanctions go away, you get all of the Russian business back. So we don't need it, but the bottom line is it's a good business. It's a little fishy, people like to say, but the fact is it's a good business and it's a compelling valuation.
And then finally, you're a fan of AmBank. They used to be in the bond insurance business, but they don't operate anymore. So why do you have it in your portfolio?
It came out of bankruptcy, and they have the runoff of the old insurance business. So they're still in the business, they just don't write new policies. So they manage the old insurance. They have $5 billion of tax loss carry forwards, and they have litigation now. So all of these vehicles that they insured leading up to the financial crisis that caused them to go into bankruptcy, they're suing. Some are JP Morgan, Merrill Lynch, Nomura, and others. The numbers on settlements are substantial. So we don't normally like to have what I would call a litigation play, but I think the runoff of their existing insurance that they have is worth the stock price. The bonus is the litigation. And we've seen other cases settled with other companies, and if we apply even just a fraction of the amounts in terms of percentages that those companies received in settlements, it makes this company worth maybe as much as double the current price. But it has risk because it's a litigation play. You're in the courts, but most of these cases end up getting settled before it works its way through the system. So we like it a lot.
All right, thanks a lot, David.
Thank you.